Virtual's protocol is the success story on the base chain. It's a launchpad for AI agents and it's reaching new all-time highs. Now, how long can this rally last? How much more upside potential is there? Who's currently buying? Who's selling? Let's have a look at the on-chain data most people are not considering. Now, we're currently at $2.48. Since listing on CoinMarketCap, we are up 4,880%. And in the last month, we have almost 7x'd. We went up by 591%. Now, I've published several videos on Virtual's protocol on this channel before. There were 4 videos and all of them got quite a few views. The first one outperformed your average video. The second one did not outperform, but it gave a similar amount of subscribers. The third video underperformed, but it seems like interest is picking up again. A lot of YouTube search traffic, a lot of retail demand. Now, the first video had been published when the price was still at 41 cents. Again, now we are at $2.47. And so this is what this channel is all about. I try to cover altcoins that have positive momentum, but at the same time still have enough upside potential for multiple X returns. So of course, if this is your first time over here, feel free to subscribe. I publish videos regularly. Let's now jump into the data. My impression is that there's currently 2 major narratives in the altcoin market. The first narrative is meme coin trading. It's the pump.fun ecosystem. It's trading player versus player on the Solana blockchain. And that's why the total value locked on the Solana chain went up by 22% in the last month alone. Have a look at all of those tokens on Solana. It's 100% meme coins. But then there's the second narrative, and I believe that's the narrative that's currently picking up most steam. It is AI. It's AI agents, it's AI launchpads, and that narrative seems to be dominated by the Base chain. So have a look at the top tokens on Base. We've got Virtual Protocol, but we've also AI XBT. We've got Luna by Virtuals. We've got Imagine AI. We've got Vader AI by Virtuals. Simply by searching for by Virtuals on dexscreener.com, we can see that most of those tokens perform very, very well. And so that's why the Base chain is expanding even quicker. In the last month, we have seen a total value locked increase of 30%. This is a very nice, constant, positive momentum. This is the total value locked on Base over time. Now, here's what's interesting about the Virtual protocol specifically. In the early days, most trading happened on decentralized finance. Now that's not true anymore. The majority of trading volume happens on Gate.io, on Bybit, and on BitGet. So the market makers scooped up quite a bit of the supply. They're still trading on-chain, and that's why we can do on-chain analysis. But still, over time, we see how the heavyweights are getting more and more involved. We also now have leverage by the centralized exchanges. There are perpetual futures dominated by Binance. There was trading volume of 445 million in the last 24 hours. Now, on-chain, there are 2 versions of the token. The first version is directly on Ethereum. We've got 11,000 holders over here. And the second version is on the Base chain. We've got 134,000 holders over here. And so for me, the main question is always, do we see an expanding investor base? Because if there's more and more people that jump onto an asset, if the momentum is currently positive, then the price is likely going to increase further. Now, this doesn't necessarily make a judgment of what's going to happen tomorrow or next week, because there is volatility, there is leverage, there are perpetual futures. But over the long term, when the number of investors is going up, this is positive. Now let's start with the Ethereum chain. What we have got over here is the number of holders based on minimum holding thresholds. So on the left side, to be counted as a wallet, in this particular chart, that wallet has to hold at least 400 virtual tokens. So at the current price, that's roughly $1,000 worth of the token. For the chart in the middle, it's 4,000 tokens. So that's $10,000 worth of the token, and another 10x for the chart on the right. That's now 40,000 tokens, or $100,000 worth of the token. Now, this does not necessarily inspire confidence, right? We do see recently a bit of accumulation by small retail, but the larger wallets, they tend to rather now sell, right? The number of those wallets is going down. What's happening here? I think the main effect that we see over here is a transfer of the token holders on Ethereum to the centralized exchanges and to the Base chain. Because here are the same kind of charts for Base. There's very nice constant positive momentum by the small retail investor, also a lot of positive momentum for medium-sized retail, and also the whales. They are also increasing in numbers. So for Ethereum, it's going down. For Base, it's going up. Now, the launch of the base token happened in the middle of March of this year, and the number of whales is currently at 687. The number of whales in the same time frame went down by roughly 450. So across both chains, there was actually an increase of 250 whales, despite the listing on the centralized exchanges. Of course, for the other wallet cohorts, we also see a net gain because small retail didn't really change much in numbers for Ethereum over the long term, but it did grow very quickly on base. And for medium-sized retail, we have seen a decline of 1,000 wallets on Ethereum, but an increase of 4,000 on base. So really, it's net accumulation across all wallet cohorts if we include both chains. Now, crypto as a whole is currently expanding very, very quickly. What we've got behind me is the stablecoin market cap. And this is a 3-year chart, so it starts in July 2021. And we peaked in the stablecoin market cap in April of 2022. Over here, what happened was the Terra Luna collapse. So this is when Anchor protocol went bust. This is when UST depegged. The market as a whole shrunk, money was flowing out of crypto, and this is also where FTX collapsed. And then we saw the turnaround in October of last year. Now money is flowing into crypto again, and that's recently accelerating. The stablecoin market cap going up means, of course, that money is flowing from fiat into crypto, and that, of course, means that prices across all of the crypto space should continue to rise. I really like this chart because it has very little volatility. We can see the trend very clearly. In the short term, though, we might be slightly heated. What we've got over here is again a stablecoin market cap chart, but this time that's not in US dollars. This time it's relative to the entire crypto market. So you might have heard of the Bitcoin dominance chart, right? How much of all of crypto is currently in Bitcoin? That's, by the way, currently at roughly 60%. It tends to peak at around 70%. What we see over here is the stablecoin dominance. So how much of all of crypto is currently in the stablecoins? And there is a strong inverse correlation between this and crypto prices. So when the stablecoin dominance is high, crypto prices are low. And when the stablecoin dominance is low, crypto prices are high. And we seem like, at least temporarily, to hit some potential floor here, which might mean that some cryptocurrencies might see local tops. That being said, especially in the last few days, we do see how the altcoins tend to outperform the rest of crypto. So this is the others dominance. So this is the cryptocurrency market cap that's not in the top 10. And this did go up since beginning of November to today by 23%. It appears as if there is some kind of altcoin rotation happening. At least we see the beginnings of it. And so what was the best performer across all of the altcoins in the last week? It's Virtual protocol. Virtual is a launchpad of AI agents on the base chain, and it almost tripled in the last week. This is the long-term chart, very impressive. And the big question is, how can we buy something like Virtual when it's not up there, but when it's somewhere down here? My answer to this question is wallet tracking. It's trying to figure out what are other smart investors doing? What are insiders doing? What are people doing that move prices? What are people doing that tended to make the right calls in the past? And so it's always nice to see what is the smart money doing, what is the not so smart money doing. For example, this over here. This is an alert that BitBoy Crypto sold virtual tokens at 1.4 cents. We don't have the alerts where he bought this, so maybe he got some allocation because he's an influencer, but he sold his allocation. He did this multiple times, by the way. And again, what he sold subsequently went up by more than 10,000%. And so yeah, BitBoy Crypto, in my opinion, is pretty much the Jim Cramer of crypto. It doesn't make sense to copy trade him, but it's interesting to see what he's doing. There are other people though that are worth copy trading. For example, over here, we've got Crypto Gains that bought the virtual token. That was at 5.8 cents. So since then, the price went up by 2,500%. Who is Crypto Gains? It's this influencer here. He tends to buy tokens relatively early, and he tends to also be very public about his purchases, which can generate, of course, a lot of attention and can bring in more investors, pushing up the price further. So he does very risky plays regularly. He's got 138,000 subscribers. And so how do we get these buy and sell signals? It's through finding the right wallet wallets first and foremost, right? It's doing some on-chain analytics to figure out those wallets. And it's subsequently by putting those wallets in a wallet tracker and get notifications whenever they buy and sell. So over here, we've got the wallets by CryptoGains that we are tracking. We've got 55 of his wallets. But then at a later point in time, we also see more people buying into the virtual token, the people that tend to deploy much more capital. For example, over here, we've got Kyle Chessy that bought $100,000 worth of the token, and that was at 48 cents. And so here is Kyle Chessy. He's got 137,000 subscribers. And since he bought, the price went up by 220%. We've got 12 of his wallets, and of course not every trade goes like this, but in general, right, I do believe it makes sense to follow the smart money. It is much better to follow the people that tend to make profit compared to simply just picking random tokens in a list. And so I like this approach that much that I made 8 dedicated tutorial videos just on this wallet tracking topic. They are over here. It's how to find various influencer wallets. It's how to track those influencers, and it's also about how to interpret the signals that we get from the tracking. It's all part of the premium membership of this channel that's down below, thebitcoinstrade.com. It's not just wallet tracking that we do, it's also risk mitigation, portfolio diversification, backtesting. There's more than 100 tutorial videos in total in premium. Once we've got a signal, we of course also have to discuss when should we buy, when should we sell. That's why we've got our dedicated chats for the individual altcoins as well. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I will refund you 100%. There's really zero risk for you. Now, does it still make sense to buy Virtual's protocol? Is there still enough upside potential? Let's have a look at comparable tokens and let's compare the different market caps. What we've got over here is a list of AI launchpads. So Virtual's protocol is the leading launchpad for AI agents. Griffane AI tries to take some of that momentum to follow the footsteps of Virtuals. But yeah, there are a lot of competitors, but they can't reach Virtual. My impression is that the real upside potential is in the individual agents that get launched with Virtual. It's very different with the Pump.Fun ecosystem, right? Pump.Fun has thousands and thousands of new tokens launched per day. Virtual is way more restricted. And as such, the risk on capital doesn't get diluted across that many assets. Just have a look at this. In the last 24 hours, we have seen Veda AI appreciating by 50%. We've seen Sequoia going up by 38%. And yes, not every single of those tokens is going up. But on average, when you're timing this right, just have a look at the market cap comparisons. For Virtual, it takes a lot of money in order to double from 2.5 billion to 5 billion. But for something like Veda AI, it doesn't take that much money to double, triple, and maybe quadruple from here. This, I believe, is where the real opportunities are. Yes, there is accumulation for Virtual over time, and if you want to play it safe, it's probably the right bet. But if you're riding the altcoin season in order to maximize returns, I think it's better to stay away from the altcoins above 1 billion. Because once we get to those kinds of levels, it's not anymore retail that's driving the price. It's mainly the market makers. It's the levered instruments. It's the centralized exchanges that move the price up and down. And then the competition is those heavyweights. When crypto is a player versus player game, isn't it better to have the small retail investor as your enemy rather than having the strong players, the centralized exchanges as the opponent? If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.